Good morning, trade pros. Welcome to morning market update for what day is it today? Thursday, December 27th of 2018. This is George Papsov, Trade Pro Academy. Hope you guys had a great holiday with you and your families. Hope you had some time to enjoy, relax, unwind, decompress, and hopefully haven't checked the market. But if you have, you've had some volatility, and we're going to talk about that volatility in today's morning market update. I honestly haven't looked at a chart until this morning since Friday, and it felt amazing. Did I miss some huge moves? Absolutely. However, I've missed more moves in my life than I'm ever going to catch. So just accepting that kind of helps me not care too much about it. And I hope that you guys had an opportunity to capitalize on some of it. I trade every day, all year. And so these days are a great time for me to take some time off. A lot of traders do the same. A lot of them are in Fiji and on vacation. So this move, we'll talk about why it was kind of historic in two ways. Let's get started by the morning market fun fact today. So on this day in 1928, portfolio manager Walter Morgan funded the first balanced fund. And it was interesting because it was called the Industrial and Power Securities Fund, which later became the Wellington Fund, which later became the backbone of the Vanguard Group of Investments with their balanced fund. So pretty cool. The balanced fund started almost 100 years ago, and it's been a staple in portfolio management since. Today's markets in Asia, Japan's up a huge 3.9%. Hong Kong's down 0.7%. China's down 0.6%. India's up 0.4 of a percentage point. While in Europe, London's down almost 1%. Paris is down 1%. Frankfurt down almost 2%. European equities selling off pretty hard here going into the last 2 days of the year. All right, futures at in the United States, Dow's down 1.5%, S&P's down 1.5%, Nasdaq's down 1.7%. Pretty big downside after almost a 5% rally on the Dow yesterday. And we'll talk about that. So before we get into what I think caused the upside yesterday and what's going to drive the markets today, let me give you guys some cool numbers I did this morning. Thursday, December 20th, the S&P 500 dropped 66 points on 4.3 million contracts, giving it an average of 65,000 contracts traded per point. All right, that's pretty good. That's a deep market. Friday, December 21st. I tell you guys that as you go into this holiday, you're going to get reduced liquidity, reduced volume, and a more dangerous market situation. There's not as many people watching their screens. So not as many people trading means thinner volume, which means moves on thin volume could stop you out. There could be gaps. There's a lot of risk to actually trade in the market session. This year was better than other years, but if you traded this year and you're like, hey, I did good, and I'm going to always trade the Christmas holiday, that's not a good thing to take away from this year. That's what I'm trying to say is 9 out of 10 times is going to be boring and you get diced up. But anyways, December 20th, 65,000 contracts traded per point. Friday, December 21st, 3.9 million contracts trade on 98 points, 32,000 contracts per point. All right, so that's pretty good volume. Now, Monday, December 24th, we had a sell-off, 1.29 million. So the volume was half, less than half of what it was on the Friday, and almost a quarter of what it was on the Thursday. 92 points, just 14,000 contracts a point. Wednesday, December 26th, the plunge protection team comes out and decides to close their eyes and buy everything. Up a huge amount, a whopping 5% on the Dow. That was on the 26th. That was yesterday. 2 million contracts traded on 160 points for a total of 12,000 contracts per point. So as you can see, liquidity has gone down. It's dropped a significant amount, almost a third, almost actually a quarter of what it was on the real sell-off. So what I'm telling you here is, yes, markets ripped, but this rip was a buy-stop run from short sellers that were stuck at the bottom. It was also a knee-jerk reaction to what we're going to talk about next, comments out of Donald Trump and Treasury Secretary, and it's a pop in a bear market. And if you look at any other bear market, you've seen this happen before. It drops a lot. It pops for a nice short stop run and then drops back down. So I'm not, this little update yesterday, as great as it was, I'm not convinced it's going to be the start of a rally because it's on very low volume. And the question is, how does the market feel about this? You'll find out when the real traders get back to their desks on January 2nd. All right, between now and then, it's going to be reduced volatility. I know a lot of traders, myself personally, that aren't planning to check their screen until they shake off their hangover from the New Year's celebration. So if you're at your computer today looking to capitalize on the fact that you're off on a holiday, remember this. If you're working your job and you're on a holiday, where do you think professional traders are going to be? They're also on a holiday. They're not going to be in front of their computer. So remember, it's going to be more tricky and more difficult to trade in these next couple of days Keep the risk tight, have a shorter or a tighter stop, and go with less size. I'd probably go trade with half size than what you're used to. And if you only trade one lot, then be more selective and careful of every trade opportunity. Wow, the speaker's dialed up loud. Let me turn it down. All right, turn it off, not just down. All right, so that's what we got. So crude oil today is down 1.2%. It was up almost 9 percentage points yesterday. Huge rally in crude, massive rip. It's down today. All right, Bitcoin is flat for the day. At 8:30, we had initial jobless claims. They came out at 216,000 versus 216,000 expected. Continuing claims up a little bit higher, and the 4-week average decreased, which is good. We got a positive jobs report, and we know that we have a good labor market by traditional statistics. If you look a little bit deeper into it, it's not great, but our traditional statistics that we use to measure employment is giving us a positive vibe here. 10 a.m. we have new home sales. 10 a.m. we also have consumer confidence today. We have a pretty busy economic calendar. 1 p.m. we have 32 billion 7-year note auction. And at 4:30 p.m. we have Fed balance sheet and money supply. Also, crude oil is supposed to report today at 10:30. It is not because we've been closed and we've had a reduced calendar holiday. So today is API and tomorrow at 11 a.m. is crude inventory. The calendar is a little bit wonky that way. So you're going to have to wait until this upcoming Friday at 11 a.m. to trade crude, but it makes it a big Friday. So now we've only got a couple days left into the year before we close out the market for 2018. Here's what drove volatility the last couple days. All right, we got the biggest post-Christmas rally in the history of the markets. This is the first time ever the Dow's rallied over 1,000 points in one day. All right, there's a few reasons for it. First of all, we had really strong retail sales. Retail sales blew out the expectations out of the water, up almost 7% year over year. So consumption was strong into the holiday as we expected. Now our retail trade didn't pan out, and that's okay. And the reason for it was because even though retail did good, overall markets did worse. So retail wasn't going to hang on by a thread as markets entered near bearish territory. So that was that. And that's fine. Markets did, by the way, almost hit bear market territory. We missed it by 2%. We're down as much as 18 before we really rallied sharply yesterday. Also, we had some interesting stuff out of the White House. Donald Trump said, hey, we're not going to, what's his name? Jerome Powell is 100% secure. So that restabilized the market after he said he's looking, there was a leak of a report that he's looking to fire Jerome Powell. That would have caused great instability into the market. All right. If you're going to do that, you might as well end the Federal Reserve, honestly, because you're going to remove the perceived tie of the Fed as an independent organization. So he said, you know what? He's 100% secure. Fine. The market's like that. In addition, he tapped Treasury Secretary Steve Mnuchin to go in and talk to banks. So Mnuchin was working the phone with the banks, and he's Treasury Secretary. Nothing is weird about that. All right, people freaked out. Oh my God, he's calling the banks. That's normal. That's his job. However, the weird part was that he tweeted about it. He wanted people to know that he's calling the banks. The way the market accepted that was, hey, wait a minute. Is there going to be another round of quantitative easing? Or is there a lot more concern? So even though it's perceived as a safety measure, that's why we sold off before Christmas and we closed on the low tick. So that's not a good sign. That's not a sign of a good market if the Treasury Secretary is calling banks and telling everyone about it, right? There was that. On top of that, Wells Fargo releases a report right after Mnuchin talks to all the bank executives and says that there's a $64 billion equity purchase waiting to happen in the next couple of days. Why is that? Because they calculated that corporate pension funds need to reallocate from bonds into equities, all right, to the tune of $64 billion. How timely that report comes out on a day where we're 2% off of bear market territory, all right? I'll tell you this. Pension funds aren't stupid. They're not going to rebalance quarter end into low liquidity. They'll wait until the early year and explain to investors and say, listen, we're going to rebalance because there's no liquidity. So they're not dumb. And anyone that believes this headline, I'm not saying that anybody's stupid. I think that we're all out here working hard. But anyone that believes this headline is probably newer to trading, and that's okay. And that's why we're here for you. All right. That smells fishy to me. I don't see any pension fund rebalancing a $64 billion order 2 days into the year end. Not going to happen. Not at a good fill price, anyways. And last but not least, there's people who doubt that the plunge protection or the PPT team exists. Doubt no more. Just pull up some liquidity charts and see where the bid came in. I won't spoil it for you, but there was a specific time where you saw a huge contract order. 22,000 lots went through in a nanosecond, and it popped the price up higher. So see if you can spot it. Go back through your order flow charts and find it. Pretty interesting stuff. The PPT is in full action, guys. Don't doubt it. It's a thing. Last but not least, the U.S. government today is on its 6th day of its closure. Donald Trump has said he wants funding for the wall. He will not sign any bill that comes through to his desk without wall funding. And that was important, all right, because this government closure could stretch into the early January. Right now, it's not a big deal that the government's closed because government employees get like July 1st to February 31st off in anticipation for Christmas. They had a great holiday. So they're off. That was an exaggeration. They're off until the new year anyway, so it doesn't matter if the office is closed. But their paycheck's going to be affected, and the longer this government shutdown stretches, the more concerned the market will become. Right now, it's not a big issue. But as the chances decrease for a bill passing through for a stopgap funding, the markets are going to get more and more concerned. So overall, how do you take all that information and boil it down into one sentiment? You don't. There isn't one sentiment. But I will tell you this. I think after yesterday's low volume rally, today there's going to be a little bit more volume coming into the markets, as some traders will return in between holidays, others will not until the new year. So watch, and I'll tell you my 3 rules for staying safe. And if you follow these rules, the very worst is not going to be a bad day. All right. Rule number 1, trade less frequently. You don't need to be out here doing 30 trades. There's no opportunity for 30 trades. Find 1, 2, 3 good trades for the day, you're good. Rule number 2 is decrease your trading size, which means trade less contracts. And rule number 3, take your profits quicker. Just get paid. You got a profit, get paid. Don't be sitting here waiting for 30, 40 handles when you got 5 or 6. Put that in the bank. All right? 1 in the hand is better than 2 in the bush. Remember the hunting analogy. That's how we're going to trade it today. We're going to look for a little bit of downside early on. And I do think that as the money comes back to the market and comes off of holidays, we're going to push into downside territory and potentially even push into bear market territory early on in January. All right. So you guys take care. Have yourself a great day. Stay safe out there. We're happy to be back. We'll be back today, tomorrow, and then Monday we are off. Tuesday is New Year's Day, and Wednesday we're back at it and continuing back at it with no closure in our updates. All right. Appreciate you guys. Hope you had a great day and a great holiday. Let me turn around and open up the trading room. We got a great turnout today. That's what happens when you got a team of trade pros. They're there, ready to fight. Trade pros, let's open up the room. YouTube, adios. Vicky, you ready to make some money today, buddy? We got to pay those holiday expenses off. All right. Let's map out some levels. I'll give you guys some more rules for how to trade a day like today. And that all starts right now. Just give me 1 second. End this broadcast.